Broadcom is a stock and company that has performed incredible over the last 5 years. We can see up 456%. That is crazy good, right? That's not even really comparable to the S&P 500, which has only gone up about 90% over the last year. That's usually the benchmark I use on these videos, but it doesn't even really compare. I mean, we're getting close to 5x that pretty easily, right? And the dividend itself isn't unsubstantial as well at about 1.25%. This stock has just been crazy. I mean, we can go and look at the 10-year as well since 2014, right? It's up from late 2014 was at 10, maybe even if we go off 12 in early 2015, we're still dramatically just it's just been in a crazy run, right? But the point is, can it continue, right? Because at this point, it doesn't really matter what it has done if you don't own any, or if you do own it, right? Because you want to deploy capital where it's best used. So we have to decide, okay, is Broadcom, is it over? Is it done? Is it over expensive? Whatever it may be. So looking at PE here, we can see normal PE seems a little high at 135. However, forward PE is significantly below that, right? We can see it's at 35, right? And you may say, okay, that's still expensive, and it's not particularly cheap. S&P 500 right now is at 27 PE. And even that for S&P 500 historical PE is on the high side. It's not crazy high, but it is on the high side. However, when you have a company that, as we can see, has just blown out the S&P 500 out of the water, I mean, ever since it's IPO'd, but certainly over the last 5 and 10 years, it shouldn't be too surprising when you get a company that is slightly above S&P 500 PE levels, right? Because I think S&P 500 forward PE is 23, so if we go off that with the forward PE metric, we're 50% more expensive than that, maybe a little bit more than that. But like I said, when you've 5x the performance, it really shouldn't be that surprising, right? And I assume most of you know what Broadcom does. They do a lot of semiconductor stuff. They have, I'm not going to get into all the specifics of it. A lot of their customers are large players, right? Apple is a large one, although Apple's kind of trying to phase them out. Google, OpenAI, all those, lots of big players, and there's plenty others as well, but those are some of the large ones, right? I think Meta is in there as well. So, and clearly what they use and what they do is desperately needed. You don't have performances like this. In case you do, let's look a little bit more at some of the earnings, right? Historically, I mean, you got 34% from 2021 to 2022. I mean, 2022 was a decent year. Well, 2021 was a really good year. No, I think 2021 and 2022 for semiconductors, it depends on the company, but it was like, for most companies, one was just way higher and the other one was kind of meh, right? I think the stocks were hitting lows in 2022, but actually the companies were doing pretty well because they're looking to 2023, which wasn't, but it's complicated. But we can see here for Broadcom, it's really not an issue at all. We can see 34% on earnings per share, 12, and then 14 for this year is the expected benchmark. Revenue's even better. You got 21.7 and then 44% revenue increase. That is just crazy. So when you have, 1 year where you're increasing earnings per share 34%, 1 year where you're increasing revenue 44%, like this compounds, and that's how you get the growth on this company here, right? That's just how you get it. So is this company slightly expensive? I mean, yes, but also it's been performing exceptionally well. You expect a company like this to have PE at this level, because if you don't, you look at it and you say, I'm going to buy that immediately, right? This isn't at the, oh my gosh, you have to buy it immediately price, but this is at a decent price for this company, right? Now, I wouldn't go all into high tech. I love tech. I own so much tech, right? But you have to balance it out. Personally, that's what I would do. Right, you guys do whatever you want, but if you're invested in higher-ish PE stocks, historically, when you get recessions, those stocks get hit harder than the average stock. So Broadcom kind of falls into that category where it's not super cheap, and not that you have to have all value stock. I'm not saying that. I love tech, but if you were all in companies similar to Broadcom, I would be a little bit hesitant, but historically, you're going to perform well with the stock in the long run. I wouldn't be really worried about it much at all, right? We can see Schwab rates it at 47, so they think it's going to be in the 50% of all stocks performing over the next year, which that might sound bad, but it's really a okay rating, right? It's not phenomenal, but I mean, they think it's going to perform decently well even after this high run up. So they don't think it's particularly expensive, and that's kind of the theme I'm seeing around it. Economic moat wide, I've just covered economic moats and why they're important. You can check out that video if you want to, but it's good that they have a wide economic moat, and I don't disagree with this. Wouldn't give it a 10 out of 10, but it's probably close to that 8, 9 range, right? 4 stars, buy. Market Edge says avoid, buy there. And some ESG scores there. All right, let's take a little bit of a look at the PE, how it is over the last year and a half, right? So that forward PE, you are a bit high, but if you exclude 2023, since most of these companies have done well since 2024, it's right in that 2024 range between 25 and 27. You're at 27, so it's not particularly cheap, but like I said, stocks that run up this much aren't going to be super cheap, and most analysts say it's a buy. 37 of the 43 are saying buy, the rest are just saying hold, right? And the price target is still significantly above where we are at. And a couple people are saying hold on it too, right? Like 4. So not that many at all. But one thing that's one last quick note, once we get the chart loaded up, is with Broadcom, is there are some stocks in the semiconductor field that were hitting crazy highs in 2024, or crazy highs. They were hitting their 52-week highs like in the middle of this year, like June, July, right? This stock doesn't necessarily have that. It was hitting 160, 170, and then it's back up to 168. So if you want this company because you like the company, you believe in it long term, sure, should buy it. If you're looking for like a swing trade player, maybe this might go up a lot, or hey, I want a little bit more value. Not that they're super cheap, but stocks like ASML, stocks like AMD, those ones were hitting really big highs earlier in the year and are actually significantly lower. I'm not saying you have to buy those, but if that's what you're looking for, there's probably other options in this tech field. There's actually many I'd advise you to look where they're hitting bigger highs in 2024 and aren't quite at 52-week highs like Broadcom. Like I said, I love this stock. I think it's going to do well long term. So anyways, if you guys enjoyed this video, I appreciate it if you would leave a like, subscribe if you are new. I've noticed whenever someone subscribes to my channel, I often get a burst in views. YouTube's like, hey, people enjoy this guy, and then they recommend me out more. So it means a lot to me, but I would only also recommend to subscribe if you want to check out further content, because YouTube will probably recommend it to you. But anyways, I appreciate all of you for watching. I'll catch you next time.